Hey, Vinny, do we own the Mets?
When they were showing the Met thing, I was getting all excited. Like, they're going to want to talk about analysis of the Mets and what Steve Cohen's doing. Yeah. It's like better than The Big Short, so yeah.
If you're here for that, you're at the wrong panel. This is the Big Short panel. And if you attended last year, this is one of the highlights of the conferences. So
Because everybody else is so boring.
nobody is as honest as you guys. Let's start off with what happened in yesterday's market. Because for people who are worried about the valuation of the stock market, which I think many of you here have been, was yesterday the reckoning with the AI trade sort of in question at that point?
That's them.
Yeah, that's them, not you. You're long. You're another story. We'll get to you in a minute.
I mean, we worry about everything usually. So, I mean, I think it probably changed in the fact that, you know, it broke conventional narrative that American exceptionalism, American AI stocks were the only place to invest. You know, the top 10 stocks are 31%. You know, everything's piled in, and everyone's been pointing this out for a long time. And the question is, what breaks it? How does it break? And none of us know. But you know, the question is, what can go wrong from that? You know, the valuations didn't have a lot of support, especially NVIDIA at, what is it, 52 times sales. I mean, these things historically traded at 1 time sales. So, you know, I think what all of us have done during our careers, try to be contrarians, look around the world, where are cheap assets, what can go right, and how do we make money off that? And obviously, conversely of you know, what's priced to perfection and what can go wrong. So that's how I think about the world.
You know, I think when you get days like that, you realize you have to re-underwrite your positions. You realize, hold on, let me take a deep breath. What do I own? What is it? Is it a buying opportunity? It appears now it might have been a buy the dip, but certainly a time to reallocate. And
like a too bullish.
It's really amazing to me that you when stocks go up, you don't hear gain 200 billion market cap, gain 150. Lose 600 was a big deal, don't get me wrong, on NVIDIA. But it certainly is, I think, you really got to start to look at what you own. And I think now, I would call it, you know, maybe like a flesh wound, that now it's going to be under a little more scrutiny in the longer term, what's going to happen with valuation. So.
Probably out of my league speaking about DeepSeek and AI, but I did stay at a Holiday Inn, so I'm going to go and do it. The way I'm thinking about it is AI is not dead after yesterday. In fact, if anything, it'll probably be more ubiquitous and more open. And so I'm looking more at what are the 485 companies that are going to benefit from the fact that this cost is going to be significantly cheaper, theoretically, relative to what it would have been 5 days ago or what we thought it was going to be 5 days ago. So that's where we're seeing the opportunity. Because to me, AI is all a function of, and it's sad, but a function of how many people can I lay off and what percentage of my costs and my workforce can I get rid of through productivity enhancements. And I don't see that changing. I just, if anything, it might have accelerated.
Right. It's been pulled forward in terms of the efficiency expectations of it.
Way to be bullish on you.
That's kind of as bullish as I can get.
It's pretty constructive. For you, you've been long Mag 7. It's funny because you were talking before, you know, about consensus and for your careers or, you know, how you became famous as the big short traders was going against consensus. And Mag 7 is probably one of the greatest consensus trades we've seen. And you are in the consensus team.
Absolutely. I mean, I'll be the first to admit I was a little upset yesterday. You know, yesterday at the end of the day, I was watching your network, and Tom Lee was on, and he said he's still bullish, and he said he thought that the correction yesterday was healthy for the market, and I thought to myself, I could use with less health, in all honesty. But so look, I don't know what the ramifications of this is. I don't think anybody does. But I do think the U.S. economy is in great shape. So, you know, does that mean eventually you have to reallocate some? Maybe, but I think it's a mistake to make a decision just because the market went down a lot in one day.
So you just asked, there's really not a comparison, but when you think back in the mid-2000s, home prices never go down, right? They never go down. Everyone was buying homes as investment opportunities, right? That was the trade. They're buying the builders, they're buying, again, at some point there's a cycle. And this is still a secular trade. In my opinion, it's not something I would ever short or these names necessarily because there's no way to know where the long-term valuations are going to be. At least I don't believe so because you're still in a secular growth story. So when a secular growth trend ends, you're going to miss the first 30, 40% potentially on a stock trade, but that's probably you get to have another 40 to 50% chance on it.
So how do you go against the consensus without shorting this trade? If you are by nature a contrarian investor, you don't necessarily want to go against the trade itself. You might get your head ripped off. So what do you do?
So when we were sort of year-end, December, after the election, sitting around saying, okay, where's the opportunity? And we did a lot of screening, and you do any sort of valuation screening, and we laugh, we're one of 4 people that still care about valuation. And when you do that, all these Asian stocks pop up, and all these emerging market stocks pop up. And so the question is, for us, is like, okay, the conditions are there because these stocks are extremely cheap. Baba trades at 4 or 5 times earnings, 40% of the market cap in cash, and everyone hates it, right? And the question there is, well, what can go right? Right? What happens if Trump comes out and says we have a trade deal with China and everything is all set? What happens if it comes out that China is now the AI leader, right? Which they might be. And so, and the other place is we talk about political change and post the election. Trump was part of the moving right. Argentina moved right. I think that over the weekend, Colombia showed that it's going to move pretty hard right. Does Brazil move hard right? Obviously, Canada is going to move pretty hard right, and that has a huge amount of implications. And Vinny can go into the dollar and what it means and stuff like that. But
so my thoughts on as we were thinking about what needs to happen in order for Trump to be successful, right? And we were kind of solving for what needs to happen. Well, there's this thing called American exceptionalism, which most people think strong dollar. But if the dollar stays strong or strengthens, I could tell you there's a very likelihood that the markets are not going to work. In fact, if we're going to onshore all these jobs and factories, we're going to need a weaker dollar to sell our goods overseas at a cheaper price. So we have talked ourselves into, and the fact that everyone and their mother is long the dollar, we talked ourselves into, well, it's probably a decent or a higher probability than most people think for the dollar to weaken. And if the dollar weakens, what would you buy, right? And this, in line with our screenings that we were doing in valuation, just suggested to us strongly, it's like, maybe we start leaning in heavily into emerging market stocks, as the ones Porter mentioned.
Mm-hmm. Danny, how about you in terms of your contrarian trades these days?
Yeah, so Vinny and Porter will tell you they're going to be modest, but they were up 67% last year, and that's with a contrarian mind. So the point is that you can find great ideas, a lot of them on the long side and the short side. So obviously, what Vinny's talking about, for the market to work, you would need to debase the dollar over time. And as you know, I've been a gold bug for some time, and it's not, no, it's not digital gold, and it's as sexy as crypto. But to me, it's basically effectively going short things that things that could go wrong. So obviously long gold, and I agree with them, thinking outside the box, owning energy stocks when no one wants to own them. You're going to get a rotation over time, but from a risk-reward perspective, thinking away from what everyone is doing, you want to own, I believe, value names potentially that could give the benefit of a secular shift that might occur. And at some point, we have these mini rotations. I mean, the Russell was up for most of the day yesterday, right, while the S&P 500 was obviously down. So you see it happening. That was actually a healthy sell-off to a degree. The money pretty much was staying in the market. So I'm looking at a wide variety of things, opportunistically take shots when the market presents itself. So.
And let's just talk about the gold aspect, and some of our other guys who were in the subprime mortgage trade, Chad Cascarilla. I mean, they're big Bitcoin people, and I think that a lot of that resonates with us in terms of hard money. If you look at, everyone talks about the 60-40 portfolio, and the stock aspect, but if you just look at gold versus bonds over any time period, gold's destroyed bonds. And I think that we look at the debasement, the inflation costs are much higher than what they're reporting. And so for us, gold's really should be in everyone's portfolio. Or if you want to choose Bitcoin too, whatever. But I think gold over bonds is a much better choice.
Mm-hmm.
I have a new contrarian trade that I've sort of developed, which is
like just now?
Yes,
Right.
About 5 seconds ago. I think the group that's actually very interesting, and I find it interesting for the first time in a long time, is home builders. I'm not, unlike my friends here, I don't lose sleep about the deficit. I actually think
We're going to talk about that.
Yeah, well, we can talk about that. But I think rates might actually go lower. And given what's happened in California, I think there's a growing recognition that we have a housing problem in this country. And this administration may do some stuff to make it easier to build homes.
So building on federal land.
Yes,
things like that.
and so home builders, which have had a tough time of late because of higher rates, I think have gotten interesting for the first time in a while.
Do you agree with that, or are you? I mean, he's just unveiling this trade right now because he came up with it in the past
Yes.
5 minutes or so.
Well,
so how do you digest that? Do you think rates are headed lower? We are in a week where there is a Fed meeting, and there is pressure from the administration to bring rates down somehow.
The one thing I feel very strongly about is that the straw that stirs the drink in markets right now is not the Fed, it's President Trump, right? And I feel extremely strongly about that. Living through for administration one, you could wake up one day and your stocks could be up 8 to 10%, happened today, down 8%, just because he made a simple comment during a statement. So he's the straw that stirs the drink. Like his first administration, he wanted rates down. And he's been strongly hinting at it as well. So by hook or crook, I think he's going to try and get rates down. So in that regards, the builders will work.
Hook or crook? I mean,
And
what does that mean, though?
What? It's going to happen. That's what it means.
I mean, we are short housing structurally, right? I mean, in terms of short housing stock in this country. And, when you look at California, it's going to have a massive stimulus between the insurance funds that come in and all the rebuilding funds that come in. After any one of these calamities, after Katrina, after, the KRW in 2004, I think it was, there's huge stimulus that comes behind that. And so there's obviously going to be a lot of home building in California. Inflation is going to be a problem because they're all trying to build the house at the same time. But we're structurally short housing stock in this country. And that's also a direct reflection of what happened of the GFC, right? The housing standards or lending standards cut off very, very quickly. And so
I want to go back to the rate question because I think that the longer end of the yield curve is really the only kind of report card or self-check mechanism right now. I think everyone in this room agrees that when we see rates on the 10-year yield drift towards 5%, we see equities sell off. It's a big number. And it's not just because it's symbolic or it's technical. Things do slow down at those levels. And so when you think about you can control the short end of the curve. Obviously, the Fed can do that. And yes, they can control the long end of the curve with 15 years of QE1. We could have 5, 6, and 7 by the time we're all done with this. But I do think that if you start to see a policy where the demand is short-term rates go lower, and we're going to get a glimpse of this tomorrow, I believe, and it just so happens that it's Tesla call. I don't want to talk about Tesla, but Elon Musk conference call.
He does want to talk about
tomorrow.
Gravitational pull.
Elon Musk call tomorrow is at 5:30. The Fed's at 2:30 conference call or press conference. So that's going to end. I would expect that Musk, like he did 2 years ago, went against the Fed for higher rates because it was hurting his car sales. If it just mentions it on that call tomorrow, the Fed will probably be neutral tomorrow. It could. These are the type of things where, to Vinny's point, you have to deal in the news cycle with these type of things. So I believe the effect of that could be, if it were to happen, or even if there's any rhetoric, short-term rates go lower. I think the exact effect will be long-term rates move higher. Because the thought would be, if you artificially suppress short-term rates, it will potentially bring back inflation. So those are the things that, Steve loves that, keeps me up at night. But look.
No?
Yeah, I sleep well.
Yeah.
Just want you to know.
I mean, that's an extraordinary prediction, though, to say that Elon Musk, by talking on a conference call, is going to impact yields.
I don't agree with that.
What do you mean? I mean,
I don't agree. I think he's living in la la.
No, but it's not just Musk. I'm not just saying that. But
he's
Trump
one of
has
the most
said,
powerful guys.
Trump has said it. He says, right, he's listening to everything he has to say about, you think that app was shut down yesterday? Who shut the app down yesterday? I'm just saying, like, what do you think? So I'm not trying to make a bold prediction. I don't think it's a bold prediction. What I'm saying is if you start to hear rhetoric, no matter who says it, that you want to control short-term rates, I think the impact will be long-term rates moving higher. That's going to have the opposite impact of what you think it would be.
I mean, I think at the crux of all of this is the notion that we live in a world, an investing world, that will be dominated by Donald J. Trump for the foreseeable future. For you guys, and Danny had mentioned this in passing, but in case you missed it, Seawolf had a 67% return last year. on the Trump trade. So how much of that trade is still on? What do we do now that he's in office? How has it changed? The anticipation of Trump, the election of Donald Trump, and the hopefulness, between the election and the inauguration, and now.
First of all, we're not MAGA people. I have no political opinion whatsoever. But
That's a lie. But
no, it's true.
okay.
It's true. I think it was pretty self-evident that to me at least, it was that he was going to win the election. And there were a lot of asymmetric trades set it up. Whether we went on CNBC, talked about Fannie and Freddie preferreds. Obviously the immigration's a big issue, so a lot of the prison stocks were a big winner for us, and a lot of that's still out there. But I think that we try to think a little bit differently about the next phase, right? Try to think about, okay, everyone's looking at NVIDIA and trying to figure out DeepSeek. I don't want any part of that, honestly. I want to try to figure out where are really cheap assets that can double and triple. And go into that, I go back to China, and everyone talking about higher yields, but the best performing bond market in the world last year was China. And rates are lower there, right? Imagine this in this country, if rates overnight go to 2%, everyone in this room would be massively bullish, right? And in China, they're directing their state pension funds to buy stocks. So you have this totally reverse condition where everyone hates it, and they have all these conditions to possibly be pretty bullish. And so that's the kind of, I'm not betting my entire portfolio that way, but those are the type of things. If I'm wrong, I'm not going to lose a lot of money. If I'm right, Baba can trade at 15 times earnings. It's a triple from here, right?
And we still have some of the Trump trades on. We sold the Fannie Common because I don't necessarily believe in it, but we still own the preferreds. We still own.
That's going to be that's a tougher trade.
It's a tougher trade, but a lot of these are tougher trades. Probably the easiest one right now, the one I feel most strongly about, what Trump feels most strongly about, is immigration. I feel like that was he's going to do something. So my belief is through executive orders and appropriations, we are going to see a change in our immigration policies. And sadly or not sadly, don't like the prison REITs will benefit from that because you need to detain and put monitoring services while they.
The bigger thing is monitoring, right? They only monitor 175,000 people, and Trump's talking about monitoring a couple million.
And the other thing, not to be controversial, but we have adopted grift as a service politically. It's bipartisan, right? The Dems employ grift, the Republicans employ grift, but we feel like there's a certain special thing associated with Trump administration and grift, right? And
the freaking Trump coin.
3 days before he gets inaugurated, he endorsed a Ponzi scheme, right? For lack of a better term. So
that's the right talk.
If that's going to happen, you have to open your mind and say, what other things of grift? So we are just kind of following the money who got him into his administration and acting accordingly.
So not to bring back Tesla, but that seems to be where we go anyway. You would not short, you wouldn't short, and this may have existed before the grift trade was in place, but you wouldn't short Tesla or go against Elon Musk. You would see that BGC, for instance, could be some sort of a beneficiary. That's sort of like the tenets of the grift trade.
An interesting trade on the short side is to be short, and I'm not going to mention it, short anything that Musk is against, right? Because you actually lose a big.
That would be England.
What?
These days, that would be England.
But you lose a big investor audience. You lose the cult that would invest. For example, we've been short Lucid, right, for a long time. And the beauty about being short Lucid is a function of the fact that nobody who invests in Tesla is going to be long Lucid. So you've lost an entire audience of people.
You don't question him when he says Musk has power over the markets? I just want to be clear. It sounds better coming from
one of the biggest, cheapest markets in the world.
Tesla's the biggest cult stock the world's ever seen, right? So trying to short the biggest cult stock the world's ever seen is not healthy for anybody, right? So
hasn't been healthy for us from time to time. No.
So that's interesting. Just sort of there's got to be an ATM. There's a finite pool invested in the EV trade.
Correct.
And it's all going to Tesla, and it's going to go away from a Lucid or whatnot. How do you interpret the land of Trump and the investing world that we live in now? What's changed?
I mean, the thing that I think about in terms of, they talked about some of the regulations that might happen. I think the interesting thing that may happen is, and the whole regulatory banking apparatus has to flip, so we're at least a year away. But I think it's possible we're on the cusp of M&A amongst banks for the first time in a long time. And it's actually something, I've actually changed my mind about this. I think it's actually something that we need in this country for the banking system to maintain its health. And the reason is that the cost of playing in banks is just so much higher than it used to be because of the cost of technology. So I think JP Morgan spends something like $10 to $15 billion a year on tech. The mid-cap banks can't compete with that. So I think we need a massive merger wave amongst mid-cap banks.
Still 5,000 banks in this country. It's
Right.
nuts.
Yeah.
So now some of these banks are not exactly the best well-run banks in the world. So that's a problem trying to pick which ones you want to own. But I think that there's a potential. We haven't had a merger wave in banks in this country since the 90s. So I think it's possible we're going to get one.
Is that something you're investing in, or
Not yet.
Not yet.
And also to that, I think that there's a lot of bank CEOs out there that look and say, well, look back at 2016, I missed my window, I should have sold then, right? And then the Dems come in and they pile in all these regulations. If you miss this window, I mean, a lot of very, very old bank CEOs, they're going to miss that window, right? And they're going to retire and not sell out for a huge amount of money. So
I want to go back to the regulation you mentioned.
Yeah.
Certainly there was things that were overregulated, and we'll pull some of that stuff out in the banks and so forth. But everyone in this room has to sign documents, abide by the law. You put your money where you say you're going to put all those things. I think one of the problems what's going to have right now is the interpretation of the SEC and all the other regulatory stuff that's in our world. And I think it's up to us to monitor these companies, publicly traded companies, I'm saying. But you have to start to think, especially if you're a short seller, that are you going to be able to, is the SEC or the DOJ going to care or do anything to enforce when it's one thing to have these meme coins and shit coins everywhere that are just people are just letting those things go and not saying anything about them. But you have to start to think about that when you're analyzing a company, even from the long side. But I'm saying, all right, the accounting and everything like that. So if that's your thesis on an accounting irregularity, you have to start thinking that may not be identified or flagged.
I mean, they haven't looked at this stuff in years, Dan.
No, I know, but
they
now
don't
even
care.
more so. I'm just saying
Yeah,
it's
I know.
something you have to start to think about.
So basically, you think that the regulatory pendulum had been so far to one side, over-regulation, very tight, and now it's swung all the way back to the point where malfeasance can happen.
I just think you need
So
to be aware of it.
it'll be a richer field for folks like you, in theory.
In theory.
It's early.
It's early,
It's
yeah.
early.
But it feels highly probable. I mean, I agree with what Steve was saying. I'd be shocked if M&A didn't pick up in a pretty sizable way in regional bank land. The larger banks, I doubt it. They're just too big. But I do think we need some healthy consolidation in regional banks because they need to be more effectively compete, not just with the big banks, but also with private equity as well.
But we're only 7 days into this Trump administration, and I think one interesting example was what happened with California and Newsom and the environmental agencies. Newsom flip-flopped, 180 degrees and wants to take down the Coastal Commission, right? All those big homes in Malibu, you couldn't have rebuilt any of these things if the Coastal Commission was in there. And so he's sitting there and said, okay, tear it down, right? Get these houses rebuilt. And that's a big change in 7 days.
Right. Let's talk about bubbles, because you guys made your name in one of the biggest bubbles in our history. Are there any out there? Do you see bubbles in the market?
Yes. The biggest bubble of them all is the fiat debt bubble.
Is the what?
The fiat debt bubble. Sovereign
Oh, there he
debt bubble.
goes.
We were
So-
waiting for it. It only took 25 minutes.
No, I mean, look, the reality is
No one likes that, but-
the math is horrible, right? You can't keep spending trillions upon trillions of dollars, and it doesn't work, right? It doesn't. But it does work in the market.
Can I respond to that?
But that's the
you can.
Bitcoin thesis. That's the
That's the Bitcoin
That's the
thesis.
Bitcoin and gold thesis,
know-
and they have been right.
First of all, I just want to say that the statement that there's too much debt and stuff is to me like the great unifier of Wall Street. Everybody ever goes on TV. I mean, you got Vincent Daniel, Porter Collins, Danny Moses, as different ethnic backgrounds as possible. And you say, Danny, what do you think about the deficit? And Danny would say, oh, yeah, the deficit. And Porter, what do you think about the deficit? Oh, yeah, the deficit. And Vincent, what do you think about the deficit? Oh, yeah, the deficit. Like everybody is just always upset about the deficit, and they're upset about it for 40 years.
I would say Bafangul, the deficit, but that's very different.
And my only point is, I actually find it a more interesting question to ask is, we've been talking about it for 40 years, but why hasn't it mattered? Now, maybe they're right and it'll finally matter, but I think the reason why it hasn't mattered is a more interesting question to think about. And I think the reason for that is, A, we're the reserve currency of the world, but even more importantly, our treasuries are the lifeblood of the entire global financial system. Repos, et cetera, that's all done with treasuries. So for the deficit to matter, you have to break that system. And to break the system, you need an alternative. And at this point, there is no alternative.
First of all,
China bonds are not an alternative.
We will get no argument. You'll get no argument from us on that, Steve. The way we play it, right? I agree with you. I think the great question is, why has it not mattered, right? What are they doing behind the scenes to make you feel comfortable every day despite the math being bad, right? And they're doing a lot. It's not that shit works. Shit doesn't work, and they stuff QE, YCC, all that other stuff. And that's the reason why we buy gold.
Well, you know, rates have moved up on the 10-year yield, the longer end, and people say, oh, is there risk coming in that the government won't be able to pay its bills or finance itself? And just like you had the deep-seek moment yesterday where you kind of a wake-up call, you have a 20, 30 basis point move on a failed auction on the 10-year. Then people will start to examine what's happening here. I'm not saying, but it will happen. It has to, it's math. It has to happen. You're not outgrowing this.
It doesn't have to happen.
It's going to happen.
It doesn't
I don't know when it's going to happen. It's going to happen.
It doesn't have to happen. For a long time, it's of national security importance, like the highest importance, that we don't have a debt problem, right? Because then we can't fund the military, then we can't fund any of this stuff. And so they manage it. They switch from coupons to bills. They do the yield curve control. You know, the bailouts have been quicker and quicker and quicker, right? And so that's debasement, right? There was a problem.
But the difference is that we act, because we are the financial system of the world, we actually still have the luxury of time to fix this.
Agreed.
Whether we fix it or not is another story.
Let's
never been fixed.
This is great. Let's do a show of hands. Other than OPM, right? We could do it in the audience as well. Who is buying unlevered, long-duration, 10-year debt right now? Have you bought it?
Me?
Yeah.
I'm a stock jockey. I just do stocks.
My point is, whenever I ask that question, no hands go up. Yet it's the most important asset in the world that everybody has to buy.
No one's buying the 10-year here.
Nobody. Yet we just naturally assume someone's going to buy it. I think they will buy it because they're buying on a levered basis 50 to 1, and it's OPM and the like, and we're going to try and get sovereigns to buy them again. And that makes me even more comfortable with our gold
zero
trade.
hands went up.
Zero hands.
Private credit is obviously a huge sector. It's growing, and I wouldn't call it bubble per se, but people are just closing their eyes and putting that money to work, and they're gathering assets. So at some point, you have to you underwrite. At some point, these modifications, like that's something to keep an eye on. Nothing that's going to, I think, roll the markets right now, but as rates move higher, that has an impact on everybody that's borrowing. And so
that's why they need rates to go lower, Dave.
Well, Vinny made a comment to me, and he's right. And I said to Vinny, I go, do we care about the multi-trillion dollar? He goes, why? I go, well, what if it goes bad? He goes, they'll bail them out. The government will bail it out.
Of course they will.
And he's right. They'll bail it out. So if that's the mentality and that's the moral hazard that we've created, you got to navigate through that. It's going to get a lot harder.
We are just about out of time, but I do want to get a prediction or two from you guys. In June, you guys were on Fast Money, and Porter and Vinny were saying, make volatility great again was going to be the trade. And that really was the theme. So what's your anticipation for the next 6 months to a year? We're back on the stage in a year.
Mr. T, you're going to get a Mr. T prediction?
Pain? No. You want to go first?
So go for it.
I think, I always felt like the first 100 days were going to be low-hanging fruit for him. There was a variety of great things that he can do that were just easy to do. I think after that, if the economy starts to percolate and grow again, we'll see. We'll probably start talking about the Fed again in 6 months and what they should do.
Like possibly raise.
Possible raise.
Right.
If things go right.
I think Trump wants to win the Nobel Peace Prize. I think he's going to do everything he can to say, hey, I fixed everything. Why did Obama win it? I should have won it. I think he's going to try to usher in a real strong foreign policy and at least a period of peace.
Okay.
I think we're in a stock market that's dominated by a handful of names, and I think we're in an economy that's dominated by a handful of people. And I think that the wealth effect, which I'll always underestimate on the markets, is certainly keep it positive. And if you unwind the market at all, it actually could be the thing that slows the economy down. So everyone's looking for recession indicators, this, that, and the other. It actually could be the stock market that actually causes spending to slow that has an impact. So,
Steve.
I think the economy is fine. I think the market goes higher. Until I see signs of recession, I'm not deviating from that position.
Right. On that happy note, thank you. It's always a great conversation.
Thank you.